Is it possible that we see a second stock market crasher in 2020? In March, we saw the stock market decline nearly 40% from its highs, ending a record bull run which started after the Great Financial Crisis. Many companies saw their stock prices cut in half, and many others saw their stock prices drop 60, 70, 80% or more. Certain industries like the airline industry, the hotel industry, the cruise line industries were virtually shut down, and other industries like restaurants were severely impacted. All of this happened virtually overnight, which resulted in the quickest 30% drop in the stock market history. But since this drop, the market has taken a lot of people by surprise here and rallied up over 25% from its lows, and many are left wondering what is going on. So in this video, I want to discuss what I think is going on here, some reasons as to a bullish case for the market, and of course the bearish case for the market. And we're going to try to figure out what could possibly be driving this market higher and whether we do see a second stock market crash coming here in 2020. You don't want to miss this one. You want to stick around for this because there's going to be a lot of valuable information in here, guys. So I hope you enjoy. Drop a like down below. Let's get into it. It's sad, but it's true. The stock market is not really a representation of the economy today. It's actually a representation of the economy in the future. But not only that, right now, the way it's comprised, it represents some of the largest companies in America, not the small businesses. This means that even though a lot of small businesses are failing, they're going bankrupt, they're closing their doors, the stock market just doesn't care because the largest players are still doing fine. We can see here that just these 5 giants, Microsoft, Apple, Amazon, Facebook, and Alphabet, account for 21% of the S&P 500. That's a big weight, and this plays a role in how the S&P 500 looks. When these companies perform well, the whole index does well, and when these giants fall, that's when the market takes a steep fall as well. So even if you have hundreds of other smaller companies here in the S&P 500 performing badly, as long as these 5 giants are doing well, the market gives us a false sense, a false impression that everything looks good. Now, when we compare the S&P 500 to an equal weighted S&P 500 index, where all the holdings here are equally weighted, we can see that the divergence here recently is truly shown itself. The actual S&P is essentially flat on the 1-year chart, where the equal weighted is down 14%. So clearly, big tech is really playing a role here, and quite honestly, they are doing quite well. Facebook and Google saw ad revenues affected in March and April, but they did see some signs of recovery. Microsoft is thriving here because they offer cloud and collaboration solutions for work from home. Amazon, of course, is doing extremely well because deliveries are the new thing that every single person wants to take advantage of, as opposed to going to traditional, even grocery stores here and risk getting sick. But Apple is the odd one out here. I was actually expecting them to hurt quite a bit from this, but they seem to be holding up quite well with stores in China and their online orders for their products, keeping the business fairly strong still. I also came across this graph that MasterCard released recently, showing us that there is some recovery starting to show itself with consumer spending. So this could be signs that the bottom is already here, the worst is behind us, and consumers are starting to come back online. As a result, this is going to help any consumer type company like Apple, for example. Now, the other 2 positives for the market right now helping this rally, in my opinion, is through the government, like the stimulus checks, for example, which a lot of individuals are using to either spend on things that they want but don't need, but some are even putting that back into investments. There's a big influx of new investors that have entered the market in the last couple of months, which has also helped drive prices slightly higher here in stocks. Now, of course, the big elephant in the room, of course, is the Fed, who is supporting the economy with huge relief packages to businesses, essentially granting loans and bailouts, if you will, for any struggling industry. They're helping small businesses, they're helping large businesses, they're helping airlines, restaurants, you name it. Typically in a recession, these businesses would fail, or at least many of them would. But in this situation, the Fed is helping even the worst run companies survive through this. And as a result, many investors are not really afraid of their shares getting wiped out from a bankruptcy filing, but instead they're doubling down on investments like American Airlines or Cheesecake Factory. Now for the bull case, that's pretty much all I have here. We have big tech holding up the market. we have the stimulus checks, and we have the Fed helping businesses. But if you think about it, guys, this does make sense as to why the market's rallying, because these three factors can actually play a bigger role than most people think. But anyways, that aside, let's look at the bearish case because there's a lot more to discuss here. So first, let's talk about the actual market. In my opinion, it's extremely overvalued here. I was a big buyer of stocks back in March and April when I saw the market dip quite significantly, and my cash position went from around 35% all the way down to close to 10%. But in the last month or so, as stocks just keep climbing higher week after week, I've been building up my cash position. I've pretty much stopped all of my buying except for a couple stocks here and there. And I'm just preparing just in case we see another downturn. Many stocks that I bought back in March and April are up quite significantly from their lows. For example, you guys know that I bought Carnival at around $8 or so, and that stock's done really well for me so far. But it just goes to show you that companies that really should have gone bankrupt during this time somehow are able to survive, pull in cash, whether that's from the government or from credit companies, and they're just able to stay afloat right now in hopes that the economy recovers soon and we get back to normal soon. So as of recording this video, the PE of the overall market sits at around a 20, which seems reasonable, but when you consider the state of the economy currently, it's too high. Almost every single premium company like Microsoft, McDonald's, Visa, Nike, they're all trading at rich valuations, and it's hard to justify buying shares when I can't justify the valuations. Back in March, these businesses were dirt cheap, and I mean dirt cheap. Like McDonald's was at $125 per share, which was an example of a pure gift from the market. And those were times when I was a big buyer in these stocks. Right now, I'm just continuing to build up my cash position like I mentioned and prepare myself just in case we see some discounts once again. I also did a bit of selling in the last month or so out of companies that I didn't have full conviction in, and that has helped me buff up my cash reserves here just in case we see more downside. My concern here is that a lot of industries are not going to be the same as they were before, as the market is expecting them to be, and this could result in another sell-off here. But yes, we are going to see spending start to come back here. I have no doubt about that. In April, we were pretty much all locked down. So now as the economy opens back up here in May and June, people are going to start going out, people are going to start spending again, and the numbers are going to be better for sure compared to April. Of course, Q2 as a whole is going to be a watch because April was pretty much closed down. Most of May is closed down. We might have some good news in June, but as it stands right now, we're still pretty much in a kind of lockdown mode for the most part. This means that consumers are not spending the ways they used to before, and as a result, we can't expect businesses to earn as much money as they were before. Companies like in the hotel industry, for example, the airline industry, the cruise line industry, they're going to take a long time to come back to 2019 levels. And this is why, in my opinion, so many people have been taking their money out of those kind of stocks and putting them into companies like Microsoft and Amazon, because those businesses will continue to do well despite what's going on right now, whereas all these smaller companies continue to suffer. We can see some of these small stocks like Discover, Carnival, the airlines, they haven't recovered anywhere near the levels that they were prior to the crash. However, when we look at big tech, they're all pretty close to their prior highs. So it really shows you where money is flowing in right now. There's also concerns that a second wave of the global issue will hit us in the fall, and there's still no vaccine yet, so the market is trading on huge optimism here. If we do see a second wave which results in another shutdown, it's most likely going to lead to another sell-off in the market. Probably not as drastic as we saw in March, but it is still going to be a pretty sharp decline. But the way I see it, guys, is back in March when we saw that massive drop in the market in just a span of a couple of weeks, we had no idea what was coming. We had no idea how long we'd be shut down for. We had no idea if we could ever beat this or open up the economy again, all that kind of stuff, right? So there was a lot of fear. But now there's a lot more clarity after we've gone through this already in the last couple of months. So if we do have another lockdown, we know what to expect, especially as investors. So that's why I don't think the market will sell off as sharply if we do see another sell-off here with a second wave. Just remember that the market trades on future earnings. So right now we have estimates for 2020, 2021. But if we see a second wave, it's going to directly affect those estimates. They're going to have to be brought down again. And that's going to result in stocks selling off again. It's just logical. It's what should happen, but we'll have to wait and see if the market reacts that way. Now, in my opinion, the biggest bear point here is the huge unemployment numbers we're seeing. Unemployment in the US has seen some crazy levels recently, and this is a result of so many companies either furloughing or laying off workers in recent months. Many of these layoffs is because of the global issue, and the hope is that these jobs will resume once we get past this. In my opinion, though, we have seen way too many permanent layoffs for things to just go back to normal here once we reopen. So many companies are laying off workers week after week. You have companies like Uber, you have companies like Airbnb, you have tons and tons of companies just laying off workers permanently. And a lot of companies started this off as furloughs, but have resulted in permanent layoffs as of now. These jobs are not coming back, in my opinion, when we reopen the economy, and it's going to take months or years for us to recover back to those number of jobs. And of course, the fear here with the stock market is that the market is expecting us to rebound quite strongly here. That's at least what I think. And if we don't see that, then I would look out below, because that could be another reason for a huge sell-off. So as you can see, there's a lot of reasons here as to why the market has more downside as opposed to upside, at least in the near future. Now guys, there's other bear cases that can be made here. There's a lot of bearish news out there. Like Buffett, for example, hasn't been buying stocks, or share buybacks are halted for most companies, or a lot of lower quality companies have cut their dividends recently. But my rebuttal to that really would be that a lot of higher quality companies are still doing just fine. They may start seeing some impacts from this in the next few quarters, but as of right now, their numbers are still looking good. So if you're looking at the overall S&P 500 or the Dow, it's not going to give you a proper indication of what the actual stocks in the stock market are like today. Remember, these large companies really dominate the indexes, and they could give you a very skewed view. So I would look at an equal weighted index like we looked at prior in this video to figure out where the market is actually at today when all companies are weighted equally. Now, the last thing I want to mention to you guys, which I've mentioned to the guys in the VIP group that I have, is to keep a close eye on big tech, especially Apple. Apple is typically seen as an indicator of the overall market. When Apple falls, typically the market falls as well. And when Apple rallies, typically the market does as well. This is because it's such a large company, but also because there's so many businesses and industries that rely on Apple. If Apple is struggling, the US economy is going to be struggling as well, and tons of other businesses, big and small, will also suffer from that. So if we do see Apple start to show weakness here, start to crumble, start to sell off, in my opinion, I think that other big tech will follow, and that could lead us to another wave of big selling. So could we see a second stock market sell-off here in 2020? It's quite possible, guys. There is more bearish news and bearish sentiment out there as opposed to the bullish side. So maybe the bears do take control here once again, and we do see some more selling. Or maybe we just continue sideways here for the rest of 2020 until things start to look a bit more clear, until we get a vaccine, until we can start going back to a normal life. Remember, this doesn't mean the stock market will crash or won't crash. You just have to wait and see and just kind of see how it plays out. And what I am personally doing, like I've shared with you guys, is I'm building up my cash position, because if we do see a lot of discounts here in the future, I will be a big buyer of stocks once again. I'll be adding into some premium companies once again. So I'm definitely excited and ready to see another sell-off if that does happen in 2020 again. Guys, thank you so much for watching. Hope you enjoyed this insightful video here from me. Let me know in the comment section down below what your thoughts are on the economy right now and the stock market, whether you think there's a crash coming or not. I'd love to hear your thoughts in the comment section down below. Guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.